Hey everyone, welcome back. So today's Friday. Hope everyone had a great week. It was a rough week, but I hope you guys had a great one. What we're going to look into is the markets. Markets were a little bit mixed, but two of them were up. One of them was down, or at least flat. Bitcoin was flat. Ethereum was up a little bit, so we'll look at that. We'll also look at the miners. See the red dots on them. You got Bitfarms, DMG, Greenedge, Hive, along with CleanSpark, Iris Energy, and Sphere 3D hitting their new 52-week lows again today. Full disclosure, I did buy some more Bitfarm shares, about another 1,500 shares of those. So I'm stacking, dollar cost averaging as best as I can. And we're also going to take a look at what have we learned so far with this month from everything that's happened with the collapse of FTX. We'll look at a quick story on that one, and then we'll also take a look at Mr. Peter Thiel. He sold some shares. I have some thoughts on it. I also have my thoughts whether or not you should be buying Marathon right now. But we'll look into all that as well. And as always, you guys know the drill here. It's not financial advice. For entertainment only, do your own research. Don't fall for scams. Spam posts get reported and deleted. I'm invested in the following coins and companies as always. For full disclosure, and if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. And let's get into the markets here. So S&P was up 0.48% today to 3,965. Dow Jones was up 0.59% to 33,745. NASDAQ was flat. It was up, point-wise, 0.16 up only to 11,677. Bitcoin also was kind of flat today. When we look at the one daily chart, it was basically at 0% today. So it did go up a little bit. We had a high of 16,984 and a low of 16,526, and we closed at 16,680 right now. There's not much going on with it. RS has been going basically sideways for the last couple of days. No real direction as far as which way we're going to go, up or down. We have been coming down in price here from this point on the RSI, which was at 37. We were much higher in price. We're at 17,580. We're about $900 less than that right now. So it's still looking a little bit bearish on the one-day chart. On the 4-hour chart, we've been going sideways a little bit here, and so has the RSI. We were lower on the RSI and price was higher here, so we're still bearish on the 1-hour chart. On the 4-hour chart, on the 1-hour chart, it is looking right now like we are still kind of looking bearish. As you can see here on the RSI, it was 47 here, along with here. Price was a little bit higher, or actually was it lower? No, price was higher. So we are still looking bearish on the 1-hour chart. Hopefully we'll get a little bit of a reversal pattern happening here on the weekend, where things may change the tide a little bit. Maybe we'll get a little bit more positive and more bullish. Ethereum finished out the day today at, let's see here, it was up 0.96% on the day. It closed at 1,210. We had a high of 1,232 and a low of 1,198. Okay, let's take a look at the miners. The miners did pretty bad again today. Annie was down 6.84% to 34 cents. Argo was up 0.39% to 9 cents. Bit Digital was down 2.91% to $1. Bitfarms was down 3.85% to 65 cents. I got in at right around there, 65.338 or something like that. Pretty close to that. CleanSpark was down 2.56% to $2.28. Cores was down 4.83% to 17 cents. DigiHost was down 8.98% to 58 cents. DMG was down 3.07% to 15 cents. Greenedge was down 11.87% to 56 cents. Hive was down 5.08% to $2.24. Hut 8 was down 2.36% to $1.24. Iris Energy was down 2.58% to $1.89. Luxfolio was down 27.27 to 0.004 cents. Marathon was down 6.97% to $7.47. Mawson was up 0.3% to 37 cents. Riot was down 3.67% to $4.46. Soluna was down 4.37% to 88 cents. And Stronghold was down 2.8% to 79 cents, almost 80 cents on that one. Okay, let's take a look at the Bitcoin Network hash rate really quick, see what's going on there. We'll refresh this really quick. And we have been coming down here a little bit more. We are now at 260 million terahashes per second. Bitcoin prices have also been coming down. So miners are possibly shutting down right now with the price of Bitcoin where it's at and the network hash rate being pretty high. A lot of the miners aren't profitable if they're above 7 cents or higher on kilowatt hours. Okay, so let's take a look at our story here. FTX is done. What's next for Bitcoin, altcoins, and crypto in general? And here's what we got. So what people have learned, albeit in the hardest way possible, is that exchanges were running fractional reserve like banks to fund their own speculative leveraged investments in exchanges for providing users with a guaranteed yield. Well, it wasn't really guaranteed. Somewhere across the crypto Twitterverse, the phrase, if you don't know where the yield comes from, you are the yield, is floating around. I think that is absolutely true. I don't think we're going to see yields like we have seen in the past, 8, 12, 16% yields. I think they'll be more in line to maybe 2% at the very most, somewhere around there, 1.5%, 2%, something like that. We may see something in that range, but I don't think we're going to see those types of yields again, but I could be wrong. And then who would have known that a few ill-timed bank runs would pull down the entire house of cards by providing that while exchanges appear to have high-level revenue and tons of tokens on their books, many are completely unable to meet user withdrawal requests. And well, we've seen it with FTX, we've seen it with others as well. And hopefully the ones that are still holding on right now are in good shape. They're not over-leveraged. But we would also see the same thing happen with banks. Banks, for the most part, you put in $1,000 into them, they loan out 90% of it. They only have 10% of that original value there, and it's just loaned out, and that's how it works. So if there's a bank run on any of the banks, normal banks, possibly the same thing would happen where the bank would have to limit withdrawals until it was able to get money back in. Continuing on here, they took your coins and collateralized them to fund highly speculative bets. Absolutely. On DeFi platforms to earn yield, and then they were going to share with you as well. And that worked for a little while until Bitcoin price started coming back down. Everybody started panicking. People started getting their coins off exchanges. Whatever it was that obviously contributed to it all, right? We had the early this summer, we had the problem with Luna. That collapsed a couple of things. Now we're having this. This was possibly part of that as well, in some way tied in. And with FTX, it was just a complete cluster of breakdowns that should have never happened, or never been allowed to happen, based on the current reportings that we're seeing from the new CEO that's running this show. Next is, let me see here. They placed your user funds along with their own reserves into illiquid assets that were hard to convert into stablecoins, Bitcoin and Ethereum. And we learned that not your keys, not your coins. We've been saying this for quite a while. Get your coins in off the exchanges, put them on your own keys, put them on your own hardware wallets if you can. If you don't have hardware wallets, get them. And then investors withdrew a record number of coins from exchanges to self-custody. So this is good. This kind of lets us see which exchanges have issues with liquidity and which are being basically one for one. So if you put in $10,000 worth of Bitcoin or something like that, they have that $10,000 that's there set for that, and they don't send it out or lend it out for these high yield products, which cause the problems to begin with. So separate reporting cited a sharp uptick in hardware wallet sales as investors realized the importance of self-custodying their portfolios. So finally, people are waking up to this, that, you know, you gotta, if it's not in your custody, you can possibly kiss them goodbye. So if the number of insolvencies and temporary pausing of deposits and withdrawals messages continue to pop up over the next few weeks, it seems likely that this trend of coins leaving exchanges and popping into hardware wallets will continue. And get it done while you still can. And here's Checkmate on Twitter. Looks like Checkmate tweeted the following: with Bitcoin simply flooding out of exchanges, we now have a 5-year high in sovereign supply of 87.7 of the total. So that's pretty good. All BTC which flowed into exchanges since January of 2018 has now been withdrawn. So that's also good there. And self-custody and spot-driven Bitcoin markets are back on the menu. So that's good there. Then we have DEX and DeFi saw an uptick in inflows, perhaps a sign of things to come, but be careful with those. Cointelegraph also reported on the uptick in decentralized exchanges, activity and inflow to DeFi occurring concurrently with the record outflows from exchanges. After the events of the past 2 weeks, trust in centralized exchanges and crypto companies could be broken, and the current and next wave of crypto investors could embrace the more Web3 focused DEX and DeFi protocols, but you got to be careful there as well. And here's the part of it. Of course, what DeFi and DEXs need are more transparent framework and processes that ensure user funds are safe and being used properly. Correct. I agree with this wholeheartedly. The best thing to do, I think, is not financial advice or anything like that. This is what I've done. If you're going to be buying Bitcoin, Ethereum, any other coins, buy them on the exchange that you're comfortable with, that's pretty well funded. Buy your tokens, your coins, and then move them off the exchanges. Now, if you're planning on doing any kind of trading, I wouldn't leave all of them at one exchange. I would either put them on a couple of separate exchanges or do only 25%, 30% trading, and the rest would be on my hardware wallet, something like that. I don't day trade. I don't have the time for it. So I buy and hold, and that's kind of like my investment strategy. Don't follow it. It's probably not the best one out there. But that's kind of what I'm doing. So I think that's it. So I think we are going to see some more opportunities. I think we may come down in price a little bit more. I think until this all shakes out, we can see with Bitcoin right now being kind of flat as it is. Any little news or bad news that's going to come up is going to spook the markets, and it's going to fall a little bit more, I think. Don't know where the bottom is, whether it's going to be 14,500, 13,000, not sure where that's going to be. That is not going to be great for the miners, but I think it's something that's going to happen to shake out all the bad apples, loose trees in the field here in crypto. Okay, so that is it for what's going on here. And then let's take a look at Marathon. So Marathon, I noticed over here, went into their corporate actions, insider activity, and Mr. Frederick Thiel sold 37,000 shares at $10.77. That's roughly $300-some thousand, almost $400,000 that he sold back on October 10th, 2022. And then we also have a director, Kevin Denuncio, sold also some at 5,000, or no, he actually bought it, looks like. He bought at 5,000 shares at $13.72. This was back in August. Other than that, we don't have any recent filings for them. We do have also some short interest on them. It is increasing. We can see here it's growing here in the last couple of weeks and months. And that's not always a good sign. He didn't sell a lot. That's at least a positive. He didn't sell millions of it. He only sold close to 400,000 of it. So that's not too bad. Institutions have also been getting out of it. You can see here the latest that's popping up right now is 6 less institutions. They sold about 2.65 million shares, and it decreased by about 2.28% of percent owned by them. Biggest one that's sold right now, if I can see it here, let me see here, 1031. This was just within the last, wow, okay. So let's see, some have been buying. This one sold. SRN Advisors sold 49% of their stake, whatever they had owned. And let's see if anybody else was really selling here. People were buying, looks like, back in September. But in October, it looks like some were selling, or at least somebody sold quite a lot. Okay? So those are the two things that are kind of negatives for them right now happening. But there's other things that are also negative for them. But let's take a look at what we have on them right now. And we'll get into the nitty-gritty as well. So currently they have about 160 million shares out. Market cap is at 872 million. Stock price is $7.47. It has been falling down quite a bit here in the last couple of weeks. Their current hash rate is about 7 exahash. They are done with their Mount Harden facility. I believe they sold off all those assets there. They are trying to get to 23 exahash, and that's all going to be done through Compute North. Compute North, as you all know, is going through Chapter 11 bankruptcy. They are trying to get this restructured. They're trying to find buyers for their assets right now. With that knowledge, why don't we just get into that, and we'll continue on down here. With that knowledge that we have on them, let's take a look at it. Was it this one? This one and this one. Okay. So Compute North bankruptcy. On September 22nd, Compute North filed Chapter 11 bankruptcy protection. Compute North provides operating services to the company and hosts our equipment in multiple facilities. We deliver miners to Compute North, which then installs the equipment in several facilities, operates and maintains the equipment, and provides energy to keep the miners operating. In Chapter 11, Compute North is currently seeking to sell substantially all of its assets, including its direct and indirect ownership interests in the facilities that house the company's miners. Compute North may also seek to assume and assign the Compute North agreements to which the company's party to one or more third-party purchasers of Compute North's assets, or it may seek to reject such agreements. Accordingly, Compute North's Chapter 11 cases could cause a disruption in services provided by Compute North to us and therefore could have an adverse effect on our operations and facilities managed by Compute North. That's also not a good sign there. So we got three things that are kind of bad going on right now. And let's see here. They also got called on a loan that they have that was BTC backed. So during October 22nd, the company borrowed an additional $15 million under its RLOC facility for general corporate purposes and provided an additional 3,993 Bitcoin as collateral for the borrowing. This increased the company's collateral balance to 7,821 Bitcoin. And then on November 9th, this month, just recently, Bitcoin prices declined to a new yearly low on concerns of financial instability in the crypto industry. As a result, the company was required to provide an additional 1,669 Bitcoin, valued at 16,212 per Bitcoin as collateral for its 50 million RLOC and 50 million term loan borrowings, bringing its total collateral balance to 9,490 Bitcoin, approximately 153.9 million. The company's total Bitcoin holdings as of November 9th are approximately 11,440, of which 1,950, approximately 31.6 million, are unrestricted. That is not good as well. So if Bitcoin comes down in price, they're going to have to put up either more collateral on this, or those Bitcoins are no longer going to be theirs. So they're going to have to put in more cash, put in Bitcoin, whatever that's going to take. So that is not good news there. And then also the 11,440 Bitcoin also includes 3,000, I think it was, they bought some Bitcoin here in last year, or was it this year? Where did I see it? Here it is. So January 21st, so of last year. So this was almost 2 years ago. The company bought Bitcoin, about 4,813 Bitcoin, purchased in January 2021 for an average price of 31,000. That was a total value of, I didn't say the value here on it, but we'll take a look at the value in a minute. So they bought a lot at that point at 31,000. It's basically worth 50% now of that currently. So that was maybe a mistake there. Had they sold it at the peak, but you don't know where the peak is going to be, so that's the tough one. If they sold it as Bitcoin price was going up to 69,000, they would have done fairly well with that. That would have been a much better thing to do, I think, than to hold on to it this whole time. So that's another kind of little jab at them, a little negative thing that they've done here. But let's take a look at the numbers that we do have for them. So this year has been a whirlwind for them. They started out the year mining 462 BTC in January, and then 360 in February, 436 in March, 299 in April, May was 267, June 140, July was 792, and the reason for that was their Mount Hardin facility was hit by a storm, which brought the facility down basically for excuse me, for a couple of weeks until they were able to repair some things. Then in August they were at 184, 360 in September, and 615 BTC in October finally, getting back up to 7,000 exahash, where they started out at 3.4 exahash and came down during the summer months to 700 petahash only, and slowly have been, well, quite speedily been rebuilding that hash rate relatively quickly. There were a lot of promises that they were going to be a lot higher hash rate than they are currently. So they have had a tough year for them. They've also have a lot of debt, which we'll look into next, but here's what I wanted to show you guys, what they were kind of promising at the beginning of the year, which was over here. This is it. Nope. Which one was it? Right here. So by mid-2022, they were expecting to be at 13.3 exahashes, and this was back in February, as of February 1st. And then they were planning on being at 23.3 exahash by early 2023. Now it looks like that's not going to happen until possibly the first or second quarter of 2023, if it happens, with Compute North and everything that's going on there. So this was all reported back in January. And what else do I want to show you guys? I think that is that they were, yeah, I mean, we recovered where they were at the beginning of the year with hash rate and where it's been going, where it's come down to. Let's take a look at their balance sheet really quick, and we'll look at some other things as well that I want to point out. So balance sheet is assets currently, total current assets is down to 240 million from 362 million, down from 582 million. So they've been burning through cash quite substantially here, which isn't too good. Their total assets have, for the most part, surprisingly remained pretty much the same. We know that Bitcoin miners have been coming down in price. That's been affecting their value. That's possibly what's bringing them down in a little bit here, but not much. Property and equipment has been, well, went down in the second quarter, went up to 403 million in the third quarter. So that was a nice little increase there. Advances to vendors also, let me see here. They got 687 million in advances to vendors right now, down from 800 million, so that's okay. And that's for the miners. And look at the liabilities. Liabilities came down to 45 million. This is for the total current liabilities. So that's down from 90 million in Q2, which is great. And then long-term liabilities for the 2 quarters stayed the same at 850 million. They have a lot. Convertible notes of 731 million. Excuse me. And term loan, 49 million right there. I think that's 50 million that they added in the Q3 report. Revenue has been coming down tremendously. Bitcoin has been coming down as well, but the revenue has not kept up with, or the installation miners haven't kept up with the network hash rate increases and everything else. I'm hoping that Q4, which we're currently in, will be a better quarter than Q3 was. Q3 was a really bad quarter for them. They also reported here, where was it? Legal reserves of 24 million as well. Expenses, their general administrative 12 million. That's like, well, that's 100%, almost 100% of their revenue for mining. Got to get that under control as well. That's not looking good. Other operating income, they're down 81 million for it. It's better than it was in Q2. So income loss was 75 million 422 compared to 191 million in Q2, or Q3 is better than Q2, which is good. They still lost 65 cents per share. Sorry. And based on this, it doesn't look good. But we'll look at some other numbers here as well. Where is it? Up here. So general and administrative is 97% of their revenue. That's horrible. Second quarter was a lot better. It was at least at 50%. But this quarter, it's just outrageous. They got to get general and administrative under control. And if we look at it here, current ratio is 5.27, so that's okay. That went up a little bit. Higher is better, but debt to equity has come down a little bit here to 0.079, but we'll take a look at the numbers in more detail over here when we do a comparison. So Marathon has current all assets 1.4 billion, total current assets 240 million, current liabilities is 45 million. They did pay that down from 90 million, so that helped their current ratio increase. Total liabilities of 850 billion, and then total equity of 625 million. Current ratio is 1.361. Now, did they get updated properly? Let's see. Yep, that should have been updated. Why am I showing? Okay, I'm showing something else here. Total liabilities, total equity. Okay, 1.361. So that's not good. They are in the negative. If you take current assets minus total liabilities, there's 610 million in the hole right now. It has actually grown by 122 million from last quarter, so that's not good also. And then this one we're looking, this we're just trying to see what their price per kilowatt hour is. I haven't been able to find that out yet completely, so I'm still waiting on that one. So with all of this stuff that's going on with them and everything else, all the bad news, all the stuff with Compute North and everything else, I just don't know if they're worth buying right now. Plus, if we look at the numbers that I have for them, for the current quarter that we're in, plus the 3 prior quarters, for combining them into the 4 total quarters, we're looking at possibly 129 million. The fourth quarter is fluid; it's going to change depending where the Bitcoin price goes, how much they're able to mine, everything else. So this is still pretty fluid. This is just November is basically a guess right now, along with December. So we'll see what happens there. But I have them currently, if we go to PE 20, they are at $11.04. Currently, the stock price is at $7.47. They are trading right now at a multiple from this of 14, whereas a lot of the other miners are trading a lot lower. If we take a look at Riot right now is trading around right around a 9 multiple. Then you got other companies like Hive, which are smaller, but still growing nicely, and they are at $2.24. They are currently trading at $2.24 at around, what is that, a 3 P multiple on this. You got also CleanSpark, which is growing quite nicely as well. They are at $2.28. They are trading right now at a PE of 1.5, roughly 1.5, 1.75 PE. So you can see here that Marathon is way overbought, I think, in this current market that we're in. It is given that they are growing quite nicely to 23 exahash. They have been executing quite nicely here, at least in the last 2 months, but the prior 8 months were crap, and they were still higher value than anybody else. So I'm not sure why that is, whether it's because of their HODL position or whatnot, but also take into account that their HODL position is almost 83% restricted. You got all of 9,000 some being restricted for BTC-backed loans. So if the market goes down, there's trouble for them there. And I did some analysis just for kind of my own due diligence here. I looked into it to see if, had they sold BTC that they mine regularly each month from the beginning of 2021, where would we be? I have added in here the 4,813 that they bought. Back then they said 31,000 something. I have the end of Bitcoin, or the beginning Bitcoin price being at 29,000. I used the beginning of each month Bitcoin price for it, which was 140 some odd million. This is what they could have possibly made each month had they sold at the end of each month, the beginning of the first month, basically. And it totaled out to be that they would have about 395 million right now with the 4,000 that they bought beginning of January 2021. And it's a heck of a lot more than they currently have in their HODL position. So that's with the purchase of the Bitcoin that they bought. This is what they would have right now, 395 million roughly. Without the BTC purchase, they would have 254 million worth of cash that they could have used instead of doing BTC-backed loans, other things like that to fund their growth, to fund operations, everything else. And which way is going to be the best way to work out? Tough to tell. I personally like companies that sell at least a portion, if not all of their Bitcoin to fund growth and operation. They're not diluting shares for the stockholders. So it's a tough one. If Bitcoin goes up to 69,000 again, is their HODL position going to be worth a heck of a lot more? Yeah, but how much did they dilute shareholders because of it, and for how long? So there's trade-offs to both things. But we'll see which one works out the best. So I hope you guys got a little bit of an understanding of where I'm coming from with Marathon, at least, and my concerns with them. You have Celsius, you got Bitcoin coming down, you got the BTC-backed loans, you got Peter Thiel selling, not a large portion, but he's still selling. That doesn't bode well. And them just being currently way overvalued based on where the market is. The other miners aren't anywhere near that. Riot's a little bit closer, but Riot's also growing quite nicely. They're going to be at 12.5 exahash to 12 something exahash by next year, I think, by the end of the first half. And they're also doing immersion cooling. They have their own facilities. They have a lot more, I think, assets than Mara has. And Mara has no control over their destiny right now. They're at the mercy of Compute North. If they have I don't know what's going to happen. Nobody really knows what's going to happen with Compute North as far as I'm concerned. They could be bought out. They could just basically go out of business. Whatever happens is going to happen. And Marathon has no control over it. And that's a positive in a sense, also a negative. Positive when things are going great and you get somebody else building out the infrastructure, they're putting in all the capital into it, you're adding a little bit there as well. But when stuff goes bad and stuff goes wrong, you're at their mercy. And then you're trying to scramble to find space for your miners that you do have, and they have a lot of miners. It's going to be hard to find all that space for them. So it's a tough one. I can't recommend anybody buying Marathon right now unless it drops down to like $4 or something like that. At that point, I think it might be a worthwhile investment. But at this point, being overvalued currently as they are, with everything else that's going on, I just can't. But this is just my own thinking on. You guys have to do your own your own investing, your own investigations into these, your own research, your own due diligence into what you want to invest in. So don't take it from me. But this is just one of the reasons why I'm not getting into Marathon right now. If things change later on, yeah, I might get into them. If the stock goes down low enough, it might make more sense. Right now, I think, like I said, I'm just going to continue rambling on, so I'm not going to do that. Let me know what you guys are thinking, what you guys are doing with Marathon, whether or not you are investing in them. Are you selling them right now? Are you concerned with everything that's going on? Are you 100% positive everything's going to work out great? Let me know down in the comments. Love hearing from you guys there. But that's it. Spreadsheets available to my Patreon members. Thank you everyone there for their continued support. Love you all for watching. We'll see what we get over the weekend. Maybe we'll get into another little video on one of the other miners. If there's one that you'd like to see, let me know. We'll get into it. But other than that, we'll cover Bitcoin versus Ethereum this week, and we'll see what happens there. And I think that's it. I hope everyone has a great weekend. Thank you so much for watching. I'll see you guys in the next one. Bye.